taking. So profit taking here, potentially here, just a little bit higher. Profit taking potentially here, or my final place will probably be there. Now, if we start to break through that gap, then maybe all bets are off. Maybe I just have to accept the fact that the world's gone mad, and it's time to just go with them. But knowing the markets as I do, it is one of those things that it's easy sometimes to get confused by this stuff and get caught thinking everything's fine, let's just buy it up, and then all of a sudden something happens and it turns on a sixpence. So I won't be drawn into thinking that this market is all of a sudden recovered and we're going to get a V-shaped recovery. My thinking is we're coming down. It's just a matter of picking when.
Sorry, Ash, I'm just working on some YouTube issues in the back. Are you back and okay in here?
Yeah, I'm here, mate. Yeah.
Great. Okay, I'll leave it to you.
Well, no. I mean, when I say I'm kind of done. I mean, I don't really have too much else aside from that right now. I think hopefully that's clear enough. What I'm looking for, short-term upside to have to potentially take advantage of, but looking at these particular spots as areas that I'd come out there, and possibly even there. So taking small bits of profit, the way I would play it is first point, take a bit of profit. If the market comes up and comes back, add that point back on again and see if we can get to the next level. Take it off here. If it comes back down somewhere and then goes through, maybe if there's a turning signal, when at another place of potential support, which would be along, if this trend lines continues to hold, then again do the same thing. Add it on there, coming out, each time. And when I say coming out, I mean closing the trade or taking off the majority of it, and tucking stops up pretty tight on the rest of it, because I'm not looking for longer term moves to the upside. I'm looking for a longer term move to the downside. And if the market changed and started to come down, my strategy would be different. I wouldn't be taking off the majority of my trades at this area. Maybe they're different matter, but what I'd want to do at this point is take off a little bit, and if it breaks through and tests, add probably a full one again and take off a little bit here. And it's not really until I get right down to the lows that I will consider lightening up the position significantly.
Cheers, mate. Thank you very much for that. I'm still working through the YouTube stuff with Jeff. Jeff, can you see it at the moment? Can you just type in the Skype and let me know? We seem to be on the right YouTube channel at the moment, but we seem to have lost a couple of viewers, so I'm not quite sure what we've done. We'll see if we can work on that in the background while we do that. Thanks for that, Ash. Much appreciated. We will let you go. Hopefully we'll see you back in next week. Some changes to the show next week. Mate, have you written down your 2 or 3 things in trading that you don't do that well?
Well, yeah. I mean, to be honest, I write them down at the end of each week, and it's quite simple for me. I do when I fill in my journal, I go back and analyze my performance, and I can see that the things. There's a pattern of things that I still need to improve on. But I have to say the main one is timing. The main one for me is really about the timing. Making sure, and that is, that in itself kind of leads you to somewhere else and leads you to somewhere else. So, I mean, I get what you're saying about writing down the 2 or 3 things that you don't do particularly well, but in some respects, somebody could write down 1, and then off the back of that, write down, 2 that cause that. So there's almost a line of cause and effect. So, when I kind of think about that, I think timing. Why is the timing bad? And then I'll go back and go, right, well, timing is bad because I have an opinion, and my opinion bias might be short, and I'll want to get in before I see my technical pattern shaping up exactly the same way. And sometimes it works and sometimes it doesn't. But, this is why I do my journal and analysis, because what I want to see is, does it matter in the big picture? You know, is that really key timing really important? Because for the ones that you gain that come back, get into your right position to go in your direction, are they balanced out by the ones that just go and you should have got in straight away? So you know, there's analysis being done all the time, but that's the one I'm doing the most analysis on right now, the timing.
Cheers, Ash. We'll pick it up with the others later on, guys. If you want to post them in, you're welcome to post them in. What are the 2 or 3 things that you're doing and you're trading that aren't that good? Post them. We'll talk a bit about them a bit later on. Julian, how you doing? Welcome into the show.
Hey, Paul. How are you? Hey, Ash, guys, everybody
buddy.
out there, wherever you are in the world. Welcome to Sunday Night TTR. Yeah. So I have a couple of comments today. I'm going to start with my conclusions. So right now I'm a little bit bearish on gold. I am short and got a short position. Think we're going lower. I have a healthy respect for the way that the stock market and other asset prices are moving. I am fairly positive about the way the stock market is moving, probably for the next couple of weeks. But you know, there's a difference between being bullish and being positive. I think the stock market is probably going to either remain where it is or go slightly higher. I think the magnitude is very hard to predict from here. But if you look at the Nasdaq, it's recovered over 75% of its gains and of its losses, which is spectacular and is unheard of, if you like, in the potential for an era change. So we'll come back to that in a minute. And really, for me, on the currency side, I'm bullish on dollar yen. I feel that may bounce back a little bit, but that's sort of related to that whole asset market type of movement. So all bets are off if stocks do something funny to the downside. And I'm struggling to make head nor tail of many of the other ones, but I also think that the Commodoles, which is the Aussie, the Canadian, the Kiwi of a kind, are all related to where that stock market is as well too. And I suspect they appear to trade in a very correlated fashion. And so one could conclude that if the stock market's going to do okay, they'll do okay. I don't know how much their recovery will continue. Again, this is a magnitude rather than a direction discussion. I'm positive on the overall direction, but I just have no idea the magnitude of that positiveness. And that's where I stand about things. Now let's go into things in a little bit more detail. So we'll start with the non FX related contracts. So if we look at the gold market at the moment, that's had a tremendous run. It broke to I guess multi-week highs during the week and couldn't sustain those, and we're back inside the point at which sellers showed up before. Is this the beginning of the end for gold? Is this a return of the downtrend? I honestly don't know. I think from a seasonal pattern, gold's got a couple of weeks to go to the downside, and I think really what'll happen then, and what's really fundamental, is what the bounce, the subsequent seasonal move for a couple of weeks to the upside will be, and what the extent of that will be. So to me, we're in a corrective phase here. I think we're going to go a bit lower. It appears that we projected some highs and we're coming off a bit. Again, magnitude hard to call. I just think that has a bearish bias to it, and I'm trading it that way. Clearly, Friday helped my short position. I'm short from about 17.12, I think. That helps my short position, and we'll see how we get on with that. But overall, I'm not sure the magnitude of any move at the moment. I think it's very much dependent upon what is going on elsewhere with other asset markets and as to how that goes. If stocks continue to perform well, you might argue there's no need to rush to gold. What's very clear is that small speculators have been very heavy buyers in the gold market all the way up here. They're very long, and the commercials have begun to get out. So the overall open interest in the market is falling, with small speculators being the substantial move to the positive. They're the big buyers of gold at the moment now. Normally they tend to have quite an awful track record. So if you were looking at that as a leading indicator of what could happen next, then you would probably conclude that gold, especially if it has a seasonal bias to the downside right now, is sort of lining up for a corrective phase. But again, with the caveat that my stop's in place and it's now at break even, and I wouldn't be surprised if on Monday or Tuesday I got struck on that, the way things are moving these days, but I'm hopeful that I won't. In terms of targets, the downside, I haven't really thought that one through too much right now. Lower, and we'll see what happens when we get down there. When we look at stocks, I did just mention right now that the Nasdaq is retraced 75%, which is nothing short of spectacular. That's just unreal. Normally, what tends to happen in any major sell-off of asset markets through time, and we've seen them collectively happen vaguely once every 10 years for the past three or four decades. You can have you normally tend to have an era change. So what was before, what were the hot stocks before and the hot themes before all become replaced by a brand new set of themes. So for those of you who think 08, from 08, 09 onwards, it was the FANG stocks. So Amazon and Netbook, not yet, Facebook and Netflix. And in terms of what they've been up to, I don't think that's a secret to anybody. But is that era coming to an end? You'd normally expect it to come to an end, and I do find it remarkable that Facebook has a P multiple of extraordinary here, based upon their previous earnings, let alone what their earnings are going to be now that their major customers have all stopped work. So we'll see what happens in the results season coming out. I suspect this could be one of the
29th of April for Facebook reporting. I think it's 29th of April. Would you expecting some results from Facebook? That will have an impact on the Nasdaq, won't it?
Well, it would do. If they weren't positive, then I think that definitely would, Paul. And funny enough, that would line up with our seasonal data as well too. So there we go, guys. Towards the end of the month, which is I guess the middle of next week, we've got to have another think about where stocks are and how they're performing. Right now it's been, if you look at that chart, that's been pretty much a straight line back up again. Ignoring the treating the asset markets in the way they have done is nothing short of extraordinary, and we'll see what happens next. So yeah, there's many other stock markets in the world, as Ash has just pointed out, which aren't trading anywhere near as positively as that. The FTSE is still, struggling really to get off the 30%, and there's been movements in the Dow and in the S&P which haven't been anywhere near as dramatic as this either. So it just goes to show you that the people, that the animal spirits are still well and truly out there. I don't think that the world is as fine as the Nasdaq is suggesting. I have long held the belief that I think the coronavirus will go down as one of the great, in terms of history, one of the great truly market mispriced events leading into it of all time, short of global war, which you only really get again with height sides as well. There's been one or two instances before, but this is going to be in the top 5, I think, of all time ever. In terms of risk management and asset allocation decisions, as being a complete and utter nightmare. I have no idea why the market behaved the way it did coming into this. It was way too late, and now it's bounced back way too much. So we'll see. People have a very positive attitude. I had the pleasure of listening to Donald Trump on the TV today. And as always, he is possibly the most positive person I think I have ever seen walk the earth, given what is going on at the moment. Everything is good, and America is indeed truly great, and of course they've solved all the technological problems around this as well too. So that's marvelous, and I'm really pleased that we're getting over the coronavirus, ignoring the 700,000 infected people in the States at the moment. So look, that's my basic theory thesis around those asset markets. And I think when you look at if Paul, if you could just quickly put up a chart of the Aussie, would be quite a good example there. And if you then just look at, you can immediately see the similarity between those two charts. Again, doesn't take a genius to work out that they're quite highly correlated at the moment. And so consequently, when I'm looking at those COMDOL currencies, whilst I'm positive on them, and I think underlying it, going back, looking at weekly charts and more longer term, there is a potential, I think, for the Aussie to have actually put a bottom in place against the dollar. Certainly, if it isn't a long-term bottom, it's definitely an intermediate bottom. And there may be something else going on that eventually might prove. So if you put that onto a weekly chart, Paul, or even a monthly chart, might be even better. There's some, when you look at the monthly chart, guys, or the weekly chart, you can see some of the scales here. Hopefully it'll sort itself out scale-wise. But go and check that out, right? That's my advice to these things. Sometimes perspective is really handy, and looking at the last few days, it looks a pretty aggressive bounce. Looking at it on the weekly and the monthly charts, it's looking like something's happened, but it's still a huge amount of distance to go. and we could see a enormous rally in the Aussie eventually. But I suspect we've got to come back and have a little bit of a retest and try and find a higher low to put in place before technically we're in a little bit more of a sound place. So that's the ComDollars and dollar yen. Again, the thesis behind that is if we're having an asset market that's reasonably secure for the next couple of weeks, then why is dollar yen falling? It probably ought to rally a little bit, and so consequently I'm fairly positive on that from a technical point of view. But again, you've got to pick the exact right time to get in, and I'll be looking at the traditional signals that we use, that I use to get into that trade. But yeah, that's pretty much it for me, Paul, in terms of how I feel about things right now.
Cheers, mate. Going to be a busy couple of weeks for you. We are launching a pilot program with you, which starts next Sunday. A couple of people having a little crack at that while we work out exactly how it's going to work. But looking forward to that. Means we may not see you in TTR. There'll be some changes to TTR coming up. We'll talk more about that a little bit later on. That's it for you, Julian.
It is actually, but Paul, great idea. I better put my one in as well too. So my greatest challenge in trading is time. So finding the time to do the analysis that I need to do to put the trades on that I want to put on.
And that's part of what the system we're working on with you, the new system we're working on with you is going to be about. But look, I'm going to talk at the end of this. I'm going to ask you guys to type in or just write down 2 or 3 things in your trading you need that you're doing wrong, or you think you're not doing as well. It's not helping your trading. Just write them down. I'm going to give you a little bit of exercise to do at the end of this. See if we can make a quick improvement to your trading results. Look, interestingly, we are on YouTube, but it appears to be that, the Actions to Wealth, there's 2 Actions to Wealth channels somehow. We're in one, we've got a couple of guys in there, we don't have the rest. I don't know why. Jeffson's not the one that Jeffson. So I'm not quite sure. If you guys can't get us on YouTube, I do apologize. That's just gone completely bonkers. I presume we're still there. I think I've just lost there we go. So I've got a couple of guys telling us YouTube's working fine, and but not too many people in the room, so I'm not quite sure what's going on with YouTube. We will have a chat with James. He was up all night working on the thing in the UK, so we'll have a chat with James next week and get the YouTube stuff sorted out, because we do need it to work properly, and I'll see if I can find out what's going on. Rightio, Julian, thank you very much for that. We will stay in touch with you, and so hopefully next week we'll be launching our new process program with you, with a couple of guys testing that out. So thank you for that. Been a pretty solid week in your trade signals as well. You do tend to be particularly good in these markets which test people. I'm a lot of people in this room. That might be one of the reasons people in here instead of YouTube. That looks good. Stop live stream. No one live stream. That looks pretty good. I'll have a look at the Q&As and the chats in a minute. Look, guys, I'm going to give you guys a simple tool to really quickly improve your trading results at the end of the show. Going to talk a little bit about, if you can write down for me the 2 or 3 things that you're doing regularly wrong in your trading. I think one thing about it, everyone can do this. Everybody knows the thing. Everybody knows the thing. Write it down, and we'll talk about it a little bit at the end of the show. Rightio, we're going to go to Ainsley, then we're going to go to Jeff, and then I think we will be out. Ainsley, gold and oil. Promise so much, failed to deliver much of it in the end.
Oh, look. Oil chart, please. XTI. If we
I'll jump over to, can you see this now? Am I on
but dollar yen.
No, I'm just got to change what I'm sharing. Sorry. Oh, don't do this to me, guys. New share. I'll come over to, I think it's there. Oh, gosh, this Zoom thing gives me multiple options to go to the same thing, which can just be a little bit scary. There we go. Is that for WTI? Because WTI, you'll be talking about the IFS WTI pricing, right?
Yeah. Up. There it is.
There we go. There's your WTI daily.
Yeah. So we talked last Sunday. We're just saying, well, it was the Great Mexican Standoff. Correct. OPEC had tried to get the deal together on the Thursday before Easter, and Mexico had walked out of the deal, which is what we were discussing last Sunday. When we'd done a bit more research and found out Mexico didn't really need to cut production, because they have got 20 years they've been hedging their position. The lower end of their collar is $45. So for them, they didn't see the point in cutting production because they still get paid regardless of whether they pump or not. So Trump came in and I think in Trump typical fashion tried to heavy hand Mexico. Mexico just said, no, not happening. And what's happened is Trump has actually had to get his US production of oil to cut 300,000 barrels a day to, I think he referred to it in his positive spin as help out Mexico, which I thought was just beautiful. He was going to help them out. It wasn't that he was helping out. It was just like they had to do it somewhere. So the initial target of cutting to try and alleviate this glut of oil, worldwide oil, is 10 million barrels. It ended up at 9.7 million. That's fine. What everybody didn't realize until this week had worn on and Mexico had finally agreed to a concession of 100,000 barrels a day was that it doesn't really kick in until next month. That's a bit of a shame. So what we saw was an initial kick up at the beginning of the week, and then it just, as we suspected, it just ground down. And I think it's still because it's still a huge amount. Now come Friday was just, it had been coming down and touching around $20 and then bouncing again. But unfortunately, on Friday, we saw a nasty little continued run down below. There we go. Grind down. And then we saw this horrible little, really big dip. That really big bar, 1, 2, 3, 4th from the right, from the end. There was a few things happened in quick succession. It hit the airwaves really, really quickly. And one was, first of all, it was the Chinese economic numbers came out and they were bad. And everybody had been really, particularly Russia, had really wanted for oil to be sort of soaked up and China back up underway and everything happening. And as the coronavirus all in the rearview mirror, and they're through it and they're going to get cranking back up again. And they had been buying up and they're stockpiling and absorbing. Not quite at the rate that everybody had hoped, particularly Putin. So the combination with China of, they're not quite on their feet. Then it was the release of storage. Oil is nearly at capacity. So that hit it. And then the 9.7 million, somebody's finally worked out that the deal, whilst it was done and it's now been inked and signed, doesn't take up for another month. It was just a culmination of some really bad news all coming out at once. And it just went bang. It just broke through $20 and it just kept falling. I think it was about almost got to $17 flat, I think, is where it almost ended up. But it's now just sort of looking very ill. The upside to this is futures contracts for June are starting to come in at pricing well above $25. So what I'm thinking is people are hoping in a couple of months' time, things are settled down, countries are getting through the coronavirus, China's back up on board, the cuts of production will make some dent. They know that it's not going to absorb everything, but it is starting to head in the right direction and start to slowly grind back up again. So I think it'll probably bottom out for a little bit, and then we will go very slowly, I think, until some of the production restrictions and quotas actually cut and bite and get some traction. Then we'll see an upside to the price swing again. But at the moment, she's looking really sick. So yeah, poor thing. But I'm hopeful. I'm hopeful moving forward. But gold, that's it for me on oil, by the way. So if we could have a gold chart. Last week, where we say we were expecting a bit of we were talking about a retracement. But we started to get that, but not before we went looking for 1750, which was very interesting, which was, as we're saying, as the markets were, and I quote Ash, I think the world's going mad. we said last Sunday night, it was just the same thing. It is, gold's one of those things when everything's looking a little bit topsy-turvy and everything's looking quite mad. It's one of those commodities. It is a safe haven. It's known as a safe haven. It's been known as a safe haven for hundreds of years. It's not about to change. And I think there was a bit of a flight there Monday, Tuesday, just because it was just so Tuesday, Wednesday, when the market started open again, it was just people weren't sure. So we've got, you can see it, it's just pushed straight through on Monday up to Tuesday, up to nearly 1750 on that. And then as the week wore on and a few other bits and pieces were happening, and we're starting to see then, as Julian pointed out, NASDAQ going nutsos. Yeah, it wasn't considered what we thought. So here it is, it's coming back on the retracement. So what we were saying last Sunday compared to what's happened during the week is that we have had an extra spike up that we weren't expecting, but we're looking at a bit of the retracement we were talking about last week. So here it is coming back down again. On a technical basis, yeah, you could expect that. So Thursday's bar clearly didn't go anywhere near where we thought it would go, up to, I thought it'd go and have a close look at that R1 level, but that's okay, no problem. We're expecting a retracement. You can't keep going up in a straight direction. But with gold, mine is more of a longer term. I think we're going to have to just wear this retracement for the next couple of weeks, and then there is a seasonal bias for May to go long. So that's what I'm hoping for as well, and holding on. So that's the gold and oil wrap for the week.
Cheers, Ainsley. Thank you very much.
Ainsley, can I ask a question, please? Yes. Now, as you know, I'm absolutely out of my depth in terms of talking about oil, but it occurs to me that this OPEC meeting that's happened recently, was it last week? I think it was last week.
9th of April in Vienna via Zoom.
That'd be the one, 10 days ago.
That one.
So they pretty much solved the supply issues or the immediate supply issues. Well,
not really.
If solved is not the right word. They eased the supply issues. Would that be right?
The production issues. Well, supply is the issue.
Okay, then I've confused those two subjects, production and supply. I call them supply, but production, fine. Okay, let's go with that.
Production, yeah. They're producing too much.
Can I call it supply, please?
You can call, all right, call it supply. The demand is not there.
Because it goes to my point. And my point is, if they've solved that issue, don't they also have to solve the other issue, which is demand, to actually get the price of oil rallying? And the way I see it, the planes are still on the ground. People are still not going to work in their cars. All of those sorts of things.
And that's what we're saying.
It's a little bit relative, Jeff. You know, that argument doesn't completely stand up in economics. If they cut at 9 million barrels, if they cut at 40 million barrels, they'll push the price back up. You can manipulate the price by supply. The problem at the moment is the world's biggest user of oil, the Americans, are starting to use a lot less oil. No, biggest user of oil in the world is America. Yeah. And, you know, and their usage is falling. China trying to put some in straw. It's no doubt they're buying probably the most at the moment. But the so it is impacting buy demand. But you know, you can use one of those things to control price. It's just they haven't gone far enough. And if they have gone far enough, we haven't seen that. Those changes haven't taken effect yet. And one thing they're doing at the moment, they are seeming to me to be. Russia and the Saudis came out on Friday and said they were prepared to do what needs to be done to get the price back up. They seem very much to be trying to talk the price of oil up at the moment. And I don't think the market's buying it for $1. You know, I don't understand at all. The market's going, oh, that's nice, but you know, right now there isn't enough demand and there is too much supply, and you know, that doesn't even change for 4 weeks.
That's kind of how I see it. Yeah.
Yeah, so the other thing is for that 9.7 million, even though it's the largest cut in production in history, it's not enough. The storage is nearly at capacity for oil. Trump is having to pay the producers not to pump oil, keep it in the ground. So he's actually having to put his hand in his pocket. On that one, he was hoping that he didn't have to do that. So that was why he was so, for years and years and years, Trump hated OPEC, just hated it and said oil's too expensive. Now he's actually the biggest protagonist for pushing oil prices up. It's really hurting his oil industry. They can't do any fracking. The US oil industry is just absolutely hurting. As we said, it's $40 a barrel is where they need it to be to break even. So whilst we've had these huge cuts in production and everybody's agreed to the restrictions and the quotas and everything else, except for Mexico. Mexico has only done their smallest bit. It's been analysed that it takes a while for all the numbers to come through, and then they're just saying, well, actually, that's not a big enough cut,
You know,
especially given demand.
if the production cost of oil in the US is $40 a barrel and the retail cost is $18 a barrel, I wouldn't imagine finding volunteers to cut production would have been that hard for Donald.
No.
You know, there'll be
Unless
plenty of people
he-
who don't want to be producing it right now because you're producing it as a loss. You know, so the production cuts he put in to help Mexico really, it makes no sense to produce something that you can't sell at a profit. You know, and particularly something that one day we're going to run out of. You know, you don't really want to produce that for next to nothing.
No, they don't.
Look, we are going to go to Jeff, and thank you very much for that, Ainsley. We'll be talking to you next Sunday night, Ainsley. We're talking to you about your new program that's coming out as well. We have the pilot program for Julian starting next week. We're talking about your program and Sunday night in a webinar. More details will come out about that. I'm going to remind you guys, I'm going to talk a little bit, and I mean only for a little bit, about a couple of things you can do to quickly improve your trading results. And what I'm asking you to do at the moment is to write down 2 or 3 things that you're doing wrong, and not your theories, just 2 or 3 things that you're doing wrong. And try and make them measurable things. You know, got some really good stuff early. Panic and close much too early instead of sticking with it, not having a routine or plan planned out and working out. Emotional, get upset with stop loss led transaction. Look, there are 2 things I'm going to talk a bit more about how to do this. Look, here's a way to not get better at trading, right? Find a chat room full of people who are making no money and spending your day talking to them about trading. That is one way to not get better at trading. That is not how we get better at trading.
That is hilarious. Sorry.
Do, and no, seriously,
they do.
they find 30 or 40 other people that are struggling. And look, you know the same thing. Who's the most popular person on a trading floor? The dude that can't make any money. Everyone loves him. And they're good company and they're funny and it makes them feel better. But that's not the person who you get help from. And yet these guys in the retail thing, their desire to get affirmed and to get feedback and to get told that they're right, even by people who aren't making any money, supervises the logic. Your WTI shows 25.47 because you're on Fusion Markets and they're using a spot price, and we're on IFS Markets. We have 2 different brokers we use, and IFS Markets use our futures price. It's not important too much. It does come through on the trade call sometimes. But because you'll be on XTI and we're on WTI, and that is the difference. But even on Fusion, the same thing really applies to the oil price. It's just it's still down. You know, perhaps interesting enough on this, it hasn't come down quite as far. So yeah, look, things that don't make you a better trader. Look, if you're not making any money, being around some other people that aren't making any money makes you feel better about yourself, and I get that. But this is a pretty brutal industry. We say this a bit, you know. Trading is simple, not easy, and it doesn't help you. And you want to, we plow down our broadcast groups, information from a bunch of people who do make money from trading. Try and read that. That's more likely to help you become a successful trader. And look, we've got a number of different broadcast groups now for people coming from different areas into our customer base. The stuff that goes in there, you get stuff from, really, institutional level traders, some of that stuff. I really encourage you. Look, we've spoken a lot about Shirley and Lloyd and Saha working together and the progress they made in their trading. And now we've got Ash and Jeff just demonstrating the stuff. Find a group of 2 people, maybe 3, work together, find some success. That is not my number one. The best way to quickly improve your trading results, write down 2 or 3 things you're doing in your trading that isn't great. I like the list I just read because this will definitely work for those. Panics and close too much too early. I look even when some indicators aren't in the right places. Like in other words, when super trend's green and weekly pivots move down, I trade. Flying blind with no reference notes. Look, these are great. Write them down for yourselves. You can put them in the box. You can keep them to yourselves. I'm going to talk a little bit after Jeff about a simple way, the most simple way to improve your trading. In fact, in the middle of Jeff's cross, I'll talk a little bit about a lady who I used to coach called Kath, and I will tell you a little bit about an experience with her that'll lead us nicely into this stuff. What are the things? Great. Not to chase. Look, there's some stuff that won't work really well for the bad timing. You know, perhaps there's a little more than what I'm going to talk about, but not chase the trend when it let go. Checklist. Look, these things are great. Just write these things down. Look, we live in an enlightened world. We all know the things we don't do well. We are different to the generations before us. We're in an enlightened world and we understand this stuff. So write them all down. I'm going to talk a little bit about some of them in a few minutes. Jeffrey, technical, you'll be in every Sunday. Ainsley will be in every Sunday. Jeff will be in every Sunday. Moving forward with Trader Talk Radio. We're going to have one of the analysts come in. We're going to have Ash come in, or Julian come in, or Justin come in. Maybe Orlando will come in. We're going to have one analyst, one overall analyst guy, and some specialists. Jeff on the technical stuff, and Ainsley on gold and oil. I want to give the other guys more time. I don't want to be rushing them through. I want to give them more time. I also want to talk about some of the stuff they do with us. Jeff, you're our technical dude. What do you got for us this week as far as the technical stuff?
Mate, interesting. Last couple of weeks, I've been fairly confident of
Mate, I've
direction.
seen your results. Jeepers creepers.
Yeah, getting it pretty right, which is cool. And this week is going to be just a little bit different. I need you to.
You should write a book on providing understatement, Jeff. I'm pretty sure I saw 1,000 pips worth of closed trades the other day. Getting it pretty right. I thought you were doing more than that, mate. I thought you were doing okay. But anyway, we'll go with, doing okay. Mate, are you okay to grab the screen?
I'd love to, but you'll have to help me.
There you go, mate.
There you go. Look, it's not about the pips, mate. It's never about the pips for me. It's about it's about the percentage. It's never about the pips.
Yeah, mate.
But anyway,
I do get that. At the same time, I think it's really hard to make no money banking 1,000 pips.
Yeah, true story.
Particularly trading the way you do with tight stop losses. You're not going to lose 1,000 pips in a week, are you? So, I get what you're saying, but into the technical stuff, guys.
I'm going to actually in my session coming up in about 40 minutes time, those of you who are slingshot people, I'm going to talk about that actually, the difference between trading, say here, and trading, say here. Very, very interesting. This is all about non-coronavirus. This is all about coronavirus. So we've come from a relative, quiet, or certainly low volatility market into a high volatility market. And you will be able to see the difference here. If you actually draw a line down here, you'll see February-ish. That's when it all started to happen. And the subject is trading in that environment on the slingshot. That's, of course, a buy and buy, but that's coming up in 40 minutes for those of you who can be there. Now, mate, the reason I say that this week's going to be a little bit more interesting is that we're nowhere near the limits of our boundaries, if you like. And I've been banging on about this to all in my sessions about how we need to look at where we are and get a very, very good understanding of where we are in terms of market structure. Are we at the bottom of a channel, or at the top of a range, et cetera, et cetera? And if we are, we need to be thinking about what happens next from a technical perspective. Now, it's very, very difficult to convince anybody at the moment, myself included, that we are in a technical environment. Gee whiz. There's such a thing going around the place that's kept the whole world in lockdown, basically, unless you're fortunate enough to live in China, apparently, or as Donald Trump would have it, then let's run rampant as well. I'm not a political commentator, but gee whiz, you got to say something about that, haven't you? Anyway, the point of the exercise is where we do have absolute adherence to market structure, this week we're going to struggle because we've come off the top, we've come off the bottom, and we've come off the sideways. We're in the middle of these ranges, which is an interesting scenario because there's only a couple of them that really are going to be bounces off the top, bounces off the bottom, etc., etc. My counsel would be, if you are in that position and you want to trade technically and you are taking a good look at those market structures, have a break. Don't do it until there is very, very clear indication as to what's happening next. Like we saw last week on dollar yen. This was the only one really that was super clear, where we've bounced off the top of the range of course being that descending channel. Let's go a little bit wider so you can see it properly. It's super clear that we were in a descending channel. It's super clear that we had an incredible month. The month before, the month of March, was amazing. Look at that candle. But in reality, it bounced off the bottom, bounced off the top, and it gave us a lower high last week. That's just exactly what we're looking for every single week, something of that nature. So yes, we've still got those type of things happening, and on the Aussie we had a higher low, but not on the weekly chart. We had it on the daily chart. So you've got to be a little bit versatile in the charts that you're looking at, but the bigger picture is still very clear. And the clear thing about the bigger picture this week is that we're in the middle of these ranges. So we've got to be very, very careful because direction can change here. You know, we can, for instance, you know, we're at a resistance level here on Aussie dollar. That's got to kind of ring alarm bells and say, well, okay, look, we've just had a massive rally off the bottom of this range. Maybe it's time to think, just ease off the pedal, you know, if we're an Aussie bear, until we get a retracement and then maybe another higher low. So that's kind of where I am this week. I have to wait until we hit these boundaries again. I can still trade because there are going to be opportunities like Euro Aussie here, which has bounced off the top of our range. We're in this trade, actually. We're in this trade short, but we've got to drill down and wait for, if we're not in trade short already, we've got to wait for what? A retracement, which will give us a lower high and suggest that we can go on our way. Now that can happen on any time frame, of course. And the reason that we're in this trade at the moment, Euro Aussie short, is because it did happen on a smaller time frame, on a smaller structure. So this is absolutely pertinent, I guess, to the technicals that are still in place that maybe you're not thinking of because you're thinking, okay, we've got a coronavirus situation. We've got markets rallying around the world for whatever reason. You've really got to sit me down in I think a padded cell to tell me why the markets are rallying, the stock market's rallying, because I just don't understand that. But I don't have to understand that. If I look at my charts and say, well, okay, we've got structures within structures, and here's another one, and we're still coming off the bottom, going to the top, and off the bottom and going to the top. So we traded this from the top. No mystery. What we do now is take profit when we hit the bottom. And if it keeps going, the little bit that we've got left in the market, happy days. But if it shows signs of going the other way, well, we do exactly the same again. We trade it to the top. So nothing's going to change that until we go to a resistance level, or sorry, through a resistance level and go up here, or we go through a support level and go down here. So really the structures are still there if you drill down into the smaller time frames. But my absolutely strong advice this week would be to take a look at that bigger structure, because that bigger structure, in particular on the Aussie dollar, is telling you that we have to have some resistance here. It's just not an option. There will be resistance here. How deep it is and how steep it is really unanswerable. I can't answer that question. But is the weekly pivot going to be strong enough? I doubt it. Is the monthly pivot going to be strong enough? Maybe. And if that's the case, we've still got higher high, higher low, higher high, higher low. I'd be inclined to be a little bit bearish, the Aussie, this week on the back of that. I think we're in for a deeper retracement, but I'll certainly have a look if we get to the weekly pivot. Maybe I can just put a little bit of money on the table in case it does go and continue the cycle. Measured moves, everyone talks about those. Maybe that's it. Could be, I don't know. But what I'm saying is now is not the time to be super confident about direction, because we are at a resistance level. And although the Aussie is rallying, and some people will tell you that's a temporary state, and that's fine. But I still see this coming off the bottom of a range and headed towards the top. So that's how I'll trade it. And every single thing that's got a structure on it is exactly the same. And I can go through as many as you like. 1, 2, 3, 4, 5, 6, 7, 8, 9 pairs, maybe even 10, no, 9 pairs that are within those structures. There's probably the best of them. That's CAD yen weekly. Now, CAD, of course, is extremely reliant upon what happens to oil. And I'd like to be confident that oil can rally, because what I see here is the possibility for CAD yen to rally. But I don't know that I can be super confident until we get back in here and take out these highs and put in a higher low. So whilst that is in probably the best position of all these structures at the moment, because, as I said, we seem to be in the middle of the structure rather than the boundaries of the structure, I'll certainly be looking at that very, very closely. Euro Aussie, as I say, we're in the short. I'd love to see this break and retest here, but I don't think it will, because of what I've just said about the Aussie. The Aussie has had a strong resistance level right now, and I see that coming back. In fact, I'm super confident that it will come back, and probably to the monthly pivot. But weekly pivot first stop, let's concentrate on that one in the first instance. That is at, what's going to change, of course. Let's not call that level. 61, down to 61, which is pretty much where the monthly pivot is. I reckon that would be your buying zone there for Aussie US dollar. And if you can kind of tag that onto Aussie Kiwi, Euro Aussie, Aussie Yen, Euro, sorry, not Euro Pound, that won't work, Aussie Swissy, Aussie CAD, and certainly Pound Aussie. We're back in that short again, I'm pleased to say as well. That would be my counsel. Look at the, I think it's very, very tough to trade against the dollar at the moment, the US dollar, and have done for quite some time. Because of the uncertainty surrounding it. I know that the global commentators are saying, and as Julian has done for the past months, 3-4 months, maybe even more than that, the world is short of US dollars. We've heard that from Julian for yonks and yonks and yonks. And that's the only thing, in my humble opinion, that's keeping the US dollar afloat. Otherwise, I think it's just a junk currency. Oh, did I say that? And I want to trade against it. I want to trade along against it. So if they can solve this shortage of US dollars, and I think the market will do that, I'm really, really confident that anything against the US dollar long term will be a very good buying proposition. So there you go, mate. I think it's still all about the structures. It is going to be a bit of a struggle this week because we're in the middle of them. But where there's a structure, there's a trade somewhere. So we'll find one, I'm sure.
Mate, I've no doubt you will. It'll be another busy week for you and Ash in the UK session live on YouTube, and then the US session and the private session for the subscription holders during the week. Lots of trading, lots of opportunity. And I have no doubt in this market, there seems to be information turn up all the time. Look, guys, I'm going to tell you a quick story. It's going to get to a point. When I was trading in London, I used to be coaching there as well. And one morning, a lady booked out my morning for 3 hours. Costs they're charging us at $500 a day, an hour, sorry. And she paid $1,500 and sent me a long email. The guys didn't like long emails because we were traders. We just wanted to teach people and trade. We didn't want to read the emails. But she sent me this really long email about everything she was doing wrong. And I rang her the day before she was supposed to come in and said, "Hey, look, here's what I reckon we're going to do. Tomorrow morning, I'm going to sit at my desk and trade, and you're going to keep your money. And what you're going to do is you're going to go through your email, and you're going to stop doing all the things you say you're doing wrong in your email, because you don't need to pay me $1,500 to agree with you about the things that you're doing wrong. You could just start and fix them." And guys, my tip for you about trading is to have a look at the things that you've written down and to spend 2 weeks and stop doing one of them. The truth is, my experience of coaching sport and working with traders is that everybody knows what it is they're doing wrong. And that, as I said to Kath back in those days, that if she could trade a month without making those mistakes, I could do a coaching session with her where I could move her forward, as opposed to doing a coaching session with her where we agreed on the things that she was doing wrong and she went away and worked on those same things again that she knew when she started the session. The truth is that trading is simple, not easy. In fact, it's quite brutal. You're not going to make money doing things that you know are wrong. And I'm going to go through a few other things on this list. I trade even when some indicators are not correct. Getting in too early, panic when trade goes wrong direction. I'm not sure what the gorilla thing's about. I'm going to let that go. Panic closed too much early instead of sticking with it, not having a return or plan. Afraid to miss the deal. These things are things that you guys are doing that you know you're doing. And look, I don't mean to be brutal. I really don't mean to be brutal. But bad at timing and chase a trend. Trading, recognizing the various price action. Well, that might take a bit more work, you know. But look, if you don't understand price action and you're using it in your decision-making process, it's not going to work for you. You're actually going to have to spend some time and do some reading and see if you can get some help and get that stuff right. I really encourage you. Look, it's one of the true things about coaching, and this is one of the things I learned coaching high elite level athletes. The really best athletes that you coach, they fix this stuff, and you can spend some time making them better players. The lower level athletes, they haven't fixed the stuff they know they're doing wrong, and really, you feel like more of a primary school teacher. So I really encourage you guys, if you're really serious about this, take the things that you've written down and give yourself 2 weeks. Well, you never get rid of all of them at the same time. Take 2 weeks and get rid of one of those things and work really hard on it. Yeah, look, I'm sorry if it's brutal. I don't mean for it to be brutal, Faye, but my role here is to try and help people make money. And I can't do that by being all PC all the time. Sometimes you just got to tell the truth. And look, if you guys can do the stuff that you know you're doing wrong right, then we can take you from that level to the next level. At the moment, what happens with some people, and I don't mean to, you know, this is human nature. This isn't people we coach, it's human nature, is that we do a session, you go away to work on stuff, you do it for 2 weeks, 2 weeks later you stop doing it, we meet again a month later, we do the same stuff, and we don't go anywhere. And at the end of the day, as coaches and mentors, the thing we can't do is do this stuff for you. And it's only when you do this stuff properly yourself that you give us a foundation to really push you forward. It's the easiest thing in the world to say, I want to make money from Forex trading. I want to do this. I want to do that. My son says to me all the time, he's 2 years old. He wants a biscuit. He wants to watch TV. Well, so what? What you want doesn't matter. It's what you do that matters. So if you want a quick tip on how to quickly improve your trading results, and not only trading results, you can do this in any area of your life. And don't get me wrong, so can I. I'm not holier than you guys. In any area of our lives, we can write down the 2 or 3 things that we know we're doing wrong, and we can start and attack those things. And if we do that, we'll make meaningful change. We really will make meaningful change. But what we can't do is write down 20 things we know we're doing wrong and then complain it's not working. That's not reasonable. So I'm going to ask you guys to get serious about making money from trading, because we're in a market where we can do. And we got some great emails in the last week about some stuff that Jeff and Ash have been teaching. And from a client particularly saying, hey, look, he's been 2 years, he's really struggled. He's never quite made the money others have. And all of a sudden he's found the slingshot with Jeff and he's worked really hard at it and he's seeing the results and he's making money and he's super excited. But somewhere in that battle for him, the psychology changed. And he started doing what he was supposed to do. He started listening and doing what he was being asked to do. It's every bit as important as anything else in this. So I really encourage you. One of the things I'm thinking about doing during this coronavirus time, I'm thinking about trying to do a session once a week, maybe on a Thursday, and talking trading psychology. Because all the charts and all the knowledge, it doesn't get you where you need. We use Gary a lot nowadays as a wealth psychologist on our programs. He comes and he talks about attitudes to money because he's brilliant at it. He's got 2 books on it. He's brilliant at it. But I might start to do a bit more on trading psychology with you guys and see if we can get in your heads. Because I think that if we can get in your heads, I think we're going to make the fastest possible difference. And I'm going to go back to this. One thing I know, Jeff, is that a couple of years ago when the slingshot stopped working, you got to work and you fixed it. You know, you didn't just blame the world and sit around and go, oh, look, hell, this doesn't work anymore, dump it. We gave you a bit of support, but you got to work and you fixed it. And it's the same for everybody in this room. If you want to have these kind of results, for us to be efficient and effective in coaching you and mentoring you, we need you doing the things that you know you should be doing all the time. From there, we can move you forward. And personally, for me as a coach and a mentor, I would far rather move you forward than correct the same stuff over and over again. And if you choose
One of the
to,
hardest parts about that, Paul, I think, is actually reaching out and admitting that there is an issue. And the exercise that you've done today is, I'm pretty sure, based on exactly that. Own it, you know, get it out there, whether it's only to yourself on a piece of paper or whether it's to somebody else, in particular to your mentor or to your coach or whomever you've got available to you, trading buddy. Get it out there, because you'll feel a whole lot better, number one, and number two, it can be fixed.
Yeah, look, I think as well, Jeff, that for mine with this kind of stuff, the truth is that our people, and we love our people, I hope it isn't too brutal, guys, that we love our people, but our people can only fix the stuff they know about. We've got to provide them new stuff and new challenges and make them better, right? That's our role. But, you know, they can't necessarily do that on their own, right? There's too much misinformation on the internet for them to always be able to find the right and the best stuff. But the stuff they do know, they need to get that stuff right so we can layer on and teach them more stuff. And like I said to Ainsley earlier, guys, it doesn't matter if you're on, you know, we've got a chat group in the company we don't really like at the moment, but it doesn't matter if you're in that chat group or not. If you're spending your life talking to people who aren't making money from Forex and thinking you're going to become a better trader, it's just not going to work. Find 1 or 2 people who are committed to working hard and to keeping you honest. One thing that Shirlene and Lloyd, lovely people, one thing they never did, same as Jeff and Ash, they never let each other off. There was going to be a discussion around what they did, no matter whether it was good or bad, they were going to be honest about it. And that kind of feedback is really valuable, because it's easier to keep good at stuff if you've got someone else to respond to. Yeah. Look, it's one of the things I learned when I was being coached, that just the fact that I knew I had to go and speak to a coach at the end of the week, it meant I did everything I was supposed to do so I could tell him I had. And having a buddy, you know, someone to work with, it's hugely powerful. And look, opportunities like we have in the Forex market right now, they don't come along every week. And this is going to go on for a little while, I think, and there's some amazing opportunities, some brilliant opportunity. You guys know I think there's a big buy coming on. Well, I don't know where yet, and I'll slowly work my way into it and take my time. I think it's, you know, I think it's the best trade I've ever seen. I think the maths on it's amazing. If you trade it right with oil from this point, I don't think you can lose. And believe me when I say this, I hate when people say that in trading. You know, it is possible for oil to go to zero, I guess, and you can lose, but it's pretty unusual. Right, I hope that wasn't too serious for you guys on a Sunday evening. We have got a huge week ahead of us. We have got Ash and Jeff in the UK session on YouTube, Monday, Tuesday, Wednesday, Thursday from, I think it's 2:50 to 4 o'clock. They'll be back in the US session, the private session from 9 till 10 p.m. Singapore on the same date. We've got the support webinar with Willie on Monday. We've got a follow-up session for the European and UK new delegates on Monday night UK, Tuesday morning New Zealand. Tuesday morning in New Zealand. We've got follow-up session, a free session today for everybody who's done the slingshot, as we have a catch up from Jeff. And guys, all of a sudden with Jeff getting online and showing people what he does, the slingshot has real traction in our organization again. And it does take a little more time, but it is incredibly successful. And if you have done it, get back to it. It just works really, really well. Plenty going on this week, and as I said, I'm looking at doing a session maybe once a week on trading psychology over the next period of time and seeing if we can give you guys whatever help we can. I mean, that's what we're here to do, to give you guys as much help as we possibly can. I do want to thank you guys for, I haven't made the point. I think I have. Write down the things you know you're not doing as well as you should be doing them, and work on getting them right. And don't do 3 at a time, do 1 at a time and get that right, and then do the next one and get that right. You'll never make 3 changes to your trading at once. Make 1 trade, be really consistent until you feel you've got the hang of it, and then add on the next thing. If it takes you 3 months, that's fine. In 3 months, you'll be a far better trader and have far better results if you've taken away the 3 things that you know you do wrong the most. Right, it is 10:28 p.m. in New Zealand, makes it 6:28 p.m. in Singapore, 8:28 in Tasmania, I'd imagine, Jeff. It has been all-nighter last night when we did the session into Europe, UK. I'm going to go and get some rest and get back tomorrow morning and get into this market. Encourage you guys to do it. Encourage you guys, please, to trade within the rules. Trade proper risk, trade our strategies, trade our accounts the way that we agreed so we can look after you and give you money when you make some money. Cheers, guys. Have a great night. We'll talk to you guys next Sunday. There will be some changes to this show going forward. We will have one big analysis guy with Jeff and Ainsley each time. That's the plan at this point. So thanks for being with us. We really appreciate your company. We'll see you next week. Thanks, guys.
Hooroo.
Cheers, Ainsley. See you guys.
Bye. Have a good week.